Okay, Alejandro, you can get started.
Well, good afternoon. Welcome to our second seminar on crime and money laundering, understanding the good, the bad, and the ugly. This series that was put together by us at the Georgetown Americas Institute and Transcrime, Università Cattolica del Sacro, Cuore. Today, we're going to discuss money laundering by criminal and non-criminal organizations. Are we all criminals? In this second session, we are pleased to welcome Michele Riccardi, Deputy Director and Senior Researcher at Transcrime and Adjunct Professor of Financial and Business Information Analysis at the Università Cattolica del Sacro Cuore, and Marcela Melendez Arjona from the World Bank to discuss the distinction between money laundering by criminal and non-criminal organizations. Are we all criminals? Are money laundering by criminal and non-criminal organizations the same? Are these strategies to launder proceeds of crime different if conducted by legal firms or by criminal organizations? Do they use the same methods and schemes? And in a way, we're going to delve really deep into the strategies that different economic and criminal groups use to launder money. Michele Riccardi is also a member of the Europol SOCTA Academic Advisory Board of Expert of the Academic Advisory Board. He's also a member of the expert group of the EU Supranational Money Laundering Risk Assessment and the Italian National Money Laundering Risk Assessment. He's a member of the UN Working Group in the Measurement of Illicit Financial Flows. He holds a PhD in criminology, a master's in accounting and financial economics from the University of Essex, as well as an MA in international relations from the Università Cattolica del Sacro Cuore. Marcela Melendez, before joining the World Bank, served as chief economist for the LAC region at the United Nations Development Program. Prior to that, she was a managing partner at Econ Studion, a Colombian boutique economic consulting and research firm. She has a PhD in economics from Yale University and a BA in economics from Universidad de los Andes in Colombia. And also together with us is Roberto de Michele, who will also participate in the panel and give some closing remarks. So with that, we turn it to you, Marcela and Michele, for the seminar. And again, thanks both of you for being together with us.
Thank you, Alejandro. So I am not the expert today. I will be asking the hard questions to Michele and trying to pick his mind on the work he's been doing on for a long time. So the first thing that I think we should tell the audience is what we are speaking about when we speak about money laundering, what type of crimes configure as money laundering. And we have this idea that money laundering occurs under very sophisticated schemes. Let's start talking about how often these schemes are sophisticated, what sophistication means, and what other types of money laundering occur if they are not as sophisticated as we imagine. Michele.
No, thank you, Marcela, for the questions, and thank you to Georgetown University, to Alejandro, Roberto, for the kind invitation. Yeah, I mean, last webinar, we focused with President Elisa de Anda Madrazo on anti-money laundering policies. And actually, most of research in this field addresses AML, so anti-money laundering. While there is a little research on money laundering behaviors, reason why with a bunch of colleagues and scholars, we thought and we think that it is important to, let's say, bring back money laundering to the crime scene. So better understanding what is the behavior of criminals when they launder money. And you are totally right. There is this, and I think it's a kind of mythological belief that money laundering is always sophisticated and that most criminals launder money in the same way employing this sophisticated mechanism, because this is the impression, is the picture that comes out from media, from newspapers, and also which is reported by policymakers and politicians. Now, we don't want to deny this. What we observe based on evidence is, in fact, a variety of money laundering methods and behavior, ranging from unsophisticated to sophisticated ones. But yeah, what sophistication means when talking about money laundering is not a very easy question. But let's say, well, we should all know, at least those attending these webinars, what money laundering is. But in very short, is any type of attempt to provide an appearance of legitimacy to dirty money, to money which is illegal in origin, in order one could employ and use this money in the legal economy for expenditure, for investment, for any purpose. Now, what sophistication can mean? Well, it may mean several things. For example, it could be sophisticated, any scheme which use a lot of transaction to process illicit funds to be moved to the final form. And this usually refers to the number of layers or the extent of layering, or whether we are employing multiple methods at the same time. One could use cash at the same time, banking transaction, can employ firms to conceal the origin of the money, can employ several techniques. And this makes money laundering more sophisticated because more difficult to be traced. But also the extent of transnationality. If one moves money across a number of jurisdictions, then makes it more sophisticated, more difficult to be traced. And also, to some extent, the level of the professionalism involved in money laundering, like how many professionals can be used, can be employed, can help the money laundering schemes. Now, what we are saying that this is a sophisticated money laundering schemes is not the rule, because we see also unsophisticated methods, such as the use of cash, which, as said by several authorities all over, is still king, especially with certain predicate offenses like drugs, or the use of basic structuring or basic false invoicing schemes, which can help to conceal the transfer of illicit money. So we need to understand that it's a variety of methods and that money laundering offenders do not all behave the same way.
So what defines the type of choice that they make about the type of money laundering? You've studied this a little bit. Why don't you walk us through the big factors that differentiate the choices and the ways that money laundering occurs?
Well, we are trying to address this question with Professor Peter Reuter as well. We recently published a paper on that, trying to think what could move criminals to choose their money laundering technique or method. And we based our thoughts on criminological theories, because again, I mean, there is a lot of economic theory behind money laundering studies, but in a way, criminological contribution has been little to date. So we are trying to build on that. Now, while thinking on, we identified a number of factors and determinants, and I briefly show one slide which may help to share this. Now I'm not able to share the screen, so I kindly ask Caitlin in case to share it or to help me on that.
Would you try one more time to share it and then let me know if there's like an error message?
Let's see if it works. Yeah, I cannot do that. I'm sorry about. Here we are. Sorry. Okay.
Perfect.
Okay, I hope you can see that.
Yes, we can see it.
So thanks. So first of all, there are factors which are related to what we call the crime dimension. Okay, so to dimension related to the predicate offense, which is the crime which generated the money. There are two main reasons. The one is related to the type of proceeds. First of all, the nature. Certain predicate offense produce dirty money in cash. We mentioned drugs, for example. Most of drug markets are still settled in cash. But other crimes produce dirty money already in crypto format. Let's think about cyber crimes such as ransomware, for example. Or they produce in digital format, in digital money. So the nature of the proceeds which are generated then move or determine the way an offender can launder money, because if I generate cryptocurrency, then I may opt to launder money through cryptocurrencies or through certain schemes, such as employing mixers, such as employing chain hopping, so bouncing from one type of cryptocurrency to another. If I'm instead producing cash, I may employ certain cash-intensive businesses, for example, or cash-intensive methods. But also the amount and the regularity of the proceeds count, because if I receive one-off amount of dirty money, for example, I'm a corrupt politician or a corrupt officer receiving a big bribe and I need to launder it, is one thing. If I receive regularly amounts due to my activity, which could be related to illicit markets, that require another type of laundering method. And therefore, this depends on the type of crime itself, so on the predicate offense which generated dirty money. But along with the crime dimension, we believe there is a personal dimension which counts very much. And this relates to the type of offenders. For example, the age. Young offenders usually try to cash out as soon as possible and to spend the dirty money into leisure activity, while more senior offenders may try to invest and to, gain later on the return. Or depends on the education, on the social capital. If you are talking about a certain drug dealer, they do not have a social network big and, especially on a transnational level, so they may rely on basic money laundering methods and approaches. But if we are talking about a corrupt, high-level, politically exposed person, he may rely on a wide network of contacts, on highly technically skilled person, and therefore his money laundering methods really vary. And this also depends on the identity of the offender, on his need to be visible, to show off himself. Because, for example, if there is a criminal who wants then to, appear or to make a career in politics or in businesses, then he may want to invest, and he needs ways to conceal the dirty money in order to reinvest this money in firms, in businesses, or in political campaigns. And also depends on the objective. So what is the objective? Is to expend, or to spend, or to invest, or to reinvest in the illicit market, or to generate liquidity. All these determinants, however, also are fit into a kind of environment which pose constraints. So the anti-money laundering context counts. If we are in a place where there are, for example, limits on cash expenditure, then certain type of money laundering technique may be preferred. One may rely on false invoices, on trade-based money laundering. One may rely on moving money outside to third countries. And the same as regards the transparency of businesses. We may have the chance to talk about it later on, but the AML environment then counts. So the combinations of all these determinants then, in our belief, in our view, then determine eventually the choice of the money laundering method. And eventually, we may have very different offenders or working in different markets who, however, launder money in more or less the same way. And I make an example about this. if we have an American-based young drug dealer and let's say Russian-speaking hacker, a member of a ransomware group, then based on evidence that we are able to observe, they both try to cash out as soon as possible, spend the money as soon as possible, and therefore make their money laundering methods and money laundering attitude and behavior very similar, albeit pertaining and belonging to very different contexts.
Why don't we talk a little bit about these anti-money laundering environments? The type of rules, the requirements on banking and corporate transparency, are they associated in any way to the level of sophistication of the money laundering that occurs in these environments, and how are, like, why don't we do like a double click on that relationship? Because from reading your work, my intuition is that whenever we don't have this type of strong rules in place or are incapable of enforcing them, we should have more money laundering locally and probably less sophisticated money laundering too.
Yeah, absolutely. I mean, if there is a, we have to think we have to consider one element, which is important. Sophistication is somehow the last resort for criminals. Why this? Because sophistication implies involving more people, potentially, imply involving more countries, imply making more transactions. And if criminals can avoid this, they are happier, okay? So in a way, constraints make it more difficult for criminals to launder and oblige them to more higher sophistication. But criminals don't like sophistication because sophistication is a risk for them. So the more constraints we pose, the more difficult. I mean, this can be trivial, but this is if we observe criminals. And I make an example. So a few months ago, actually about 2 years ago, there was a big investigation in Italy, one of the many, targeting an Ndrangheta clan. And these people were gaining money from drug trafficking, mostly was cash. They were storing cash in Calabria, but then they had to launder this money. And some parts of the group decided to launder this money by moving this cash to another European country where there are no limits on cash expenditure, at least to date, which is Germany, and which they could more easily launder this money by concealing it through fake, basically, car wash businesses. So they could pretend that the car wash businesses was producing cash money by German customers, and with cash money they went to German banks and deposit this cash, saying, okay, this is coming from businesses, which is something which in Italy is more difficult to do because there are cash limits. So the existence of certain limits, of certain constraints, oblige criminals to take other direction. And this could be a direction, go to another country and launder money that way. But another direction could be, let's move to other type of money laundering methods and money laundering techniques.
We keep talking about criminals, and I guess we are all criminals when it comes to money laundering. But why don't you make the difference between what we know as criminal organizations and when we are talking about grand corruption schemes, which also occur, and when we are talking of plain tax evasion? Because many of the sophisticated methods actually help decent legal businesses to tax evade or to jump through regulations. Let's comment about that, and why don't you try to talk a little bit about how the methods differ depending on what type of business you are.
Yeah, obviously.
Now.
Yeah, obviously the question, which is the title of today's webinar as chosen by Georgetown, is provocative. Are we all criminals? Obviously not, but all people laundering money is criminal, right? So How do they differ? And as said at the very beginning, they differ because they do not have the same way of laundering money. So usually what we see is that the criminal organization, even the biggest one, they try to rely on, at least based on what we are able to observe, they try to rely on sophisticated manners only as a last resort choice, while they may try to minimize the level of sophistication. And this because of a number of reasons. One of them, as said, is also the level of education these people have, the level of social network, the fact that it is hard for them to rely on external people, which is something which instead for a corrupt high-level PEP, so politically exposed person, is easier. And if we compare, for example, the way certain drug trafficking rings launder the money with the way of some grand corruption schemes, if we think about Odebrecht, just to mention one, right, we see quite different way they launder money. The grand corruption employed more offshore triangulation, wide use of offshore accounts, offshore firms, while in the case of drug trafficking rings, this is not the rule, at least based on what we are seeing. And what about firms doing tax evasion? Again, they can rely on more international network, which they exploit for this purpose. And also because there is as said, there is some determinants which is related to criminal organization, which is they try to minimize risk, and they try to minimize risk by involving the minimum, the minimum number of external people from the organization itself. And I think this is important. And there is some data which tell it very, very easily. And I want to show it because I know it can be provocative, but I think it is paradigmatic of what we are talking about. And I'm sharing again the slide, sorry. So what you can see here is some data about the involvement by Italian mafias of female as owners of businesses, of their businesses. So the chart you can see here is a comparison between the number of female owners of firms confiscated from Italian mafias, what we call mafia firms for simplicity, and the number of female owners in the rest of Italian firms. And as you can see here, the number, the volume of female owners in mafia firms is much higher. In certain sectors, such as construction, is even 5 times higher. In certain sectors, such as transportation, is 4 times higher. Is this because mafia promote female entrepreneurship? Obviously not. But why? Because they find in the family females, so wives, daughters, sometimes former wives even, mothers, the best figurehead for controlling the businesses. And this is because eventually they trust the family females much more than they trust a Panama-based or Malta-based or Dubai-based accountant. Obviously, this is not the rule every time, everywhere, but this is very paradigmatic of how criminal organization thinks, and this is the difference with other type of money laundering offenders.
Do money launderers chat about their money laundering schemes? Are there like filtrations, or how do we learn about the way they make decisions?
This is a very good question, because I believe as a criminologist that the study of crime has much improved in the last 20 years, thanks to the study, to the analysis of conversation across criminals. and not just because of the messages exchanged in this conversation or what they were sharing, but also because of the medium which was used. So not just the message, but also the medium in Marshall McLuhan terms. However, and so there was a plenty of studies analyzing wiretap conversations or like recently, like from leaks of encrypted chats, like EncroChats, Kayak, Anom, and all this. However, in most of the conversation, there is much about how criminals for example, manage delivery of illicit commodities, first of all, drugs, how these are exchanged, how they are delivered, how payments somehow are settled. But there is very small, very little about how they launder money. So they do not talk how they launder money. And this even in blogs. So there are very interesting papers, just to mention some. For example, there is a paper by Nazari studying blogs about how cyber criminals exchange views, but there is little about how if they are asking how to launder money. And why this? So why criminals do not speak themselves on how to launder money? And I think at least there are two reasons, which are both plausible, and I don't really know at this stage what is the right one. So the first is that money laundering is a strictly personal activity. So the money could be produced collectively. A drug trafficking ring has to organize themselves as an organization aimed at maximizing the profit coming from drugs. Okay. However, once they get the money, how they launder it is personal. They can decide what to do. This could be questioned, but actually, based on the knowledge that we have, there is much unknown about if they also decide money laundering strategies collectively. If the affiliates of a criminal ring sit down and say, okay, I invest in this sector, you invest in this one, I use this and use this. We do not know about that. So it could be that it's still personal. Okay, so this one could be one reason. The second is instead that for laundering money, they also rely on external money laundering service providers, and therefore is something which somehow they do not discuss among themselves. So there is somebody else laundering the money is given to them, he or they decide what to do. And this could be also plausible. In this sense, I think there is now some interesting inputs coming from all over the world and different investigation, and which also concerns the role of some Chinese groups for laundering money of other organization, other criminal organization. Until a few years ago, there was, let's say Chinese-based money laundering was often offered to Chinese-based organization. But starting from Mexican cartels, we have seen their increasing reliance on Chinese-based trade-based money laundering or Chinese-based services. And we also have recently seen for other organizations such as Italian mafias who have employed recently Chinese-based organization for laundering their money, which is something which, at least as an observer of Italian mafias, is very surprising and was not expected until few years ago.
You have studied a little bit what type of destinations attract criminal financial flows. Why don't we talk a little bit about that? What are do money launderers or criminals get organized in a particular way to do they result in a particular market of services to launder money? How does that connect? What type of places they choose? When you talk about them decreasing the risk, that makes sense, but what does that mean? And why don't you comment on something that I found striking among your results, the fact that one of the things that will come up is that they tend to choose places with low corruption, which is, I think, an interesting, unexpected. I guess it makes sense once you discuss it, and please do, but it was unexpected for me to hear.
Yeah, no, thanks. An interesting question, which I was very interested in. There is also mythological belief here, no? That there is a small bunch of countries, somehow offshore ones, exotic destination where all the dirty money goes. And this is a mythological, okay? They are certainly used by certain offenders, but they are not used all over the world. So if we think that the Caribbean attracts dirty money from all over the world, we are wrong. I'm just saying the Caribbean, just to mention probably the most, notorious, places as a general speaking. Why that? Because I think we need to take into account what we somehow said before about what determine the choices of criminals when laundering money. They need to minimize the risk. So first thing, proximity is crucial. Again, Peter Reuter in a 1983 seminal book said that small is beautiful when speaking about illicit markets, okay? I say when speaking about money laundering, close is beautiful. Why? Because criminals want to move dirty money. If they have to move it outside the country, if they are obliged to do that, they want to do it close. Okay, so this is the first element, and therefore, if you are Italian, if you are Turkish, if you are German, if you are Mexican, you would need to go close first. So if you're Italian, you would try to avoid Caribbeans if you can. Okay, obviously one could say, well, now with digital payments, everything is close. Yeah, but not that close. Close means also culturally close. Means also places where you can rely on good local contacts, when you can rely on supporters. This is the first thing. Second, criminal wants to minimize the risk, and the risk means also losses. This make them preferring countries which are stable, countries which are well-acknowledged financial hubs, and where they can trust the money could be safeguarded there. So, for example, also in terms of low inflation, with good currencies, stable currencies, strong currencies. And corruption comes together with this. I prefer, ceteris paribus, countries with low corruption. Why? Because corruption is a risk. I prefer countries which are transparent instead. Okay, so where I can rely, when I can trust where my money goes. And so corruption is a problem. So, and this is not just speculation, so we need some studies about that. And eventually what comes out that the choices of criminals is basically a combination, a balance between the need to conceal the money, so opacity is very important, but ceteris paribus, proximity, and what we call stability or security of the money, of the investment. And for example, we try to apply this approach, this model, to money which is laundered by, again, Italians. Here you can see two charts, and this is a chart which comes out from this model that we have done, where you see that the highest risk from the Italian perspective for money laundering are some countries which are European, which are closed, which have euro, so the same currency, which have certain degree of opacity, relatively speaking. And here is what we found, actually, we observed in terms of third countries chosen by about 3,000 Italian money laundering offenders. And again, here, what we see is European countries close to Italy with euro, etc., etc. So this, in a way, proof. Okay, one may be surprised from not seeing countries from exotic offshore jurisdiction. But again, we are talking about here about a specific offender. Probably if we had to look at or observe to grand corruption offenders and other, we could see other type of jurisdiction. And also consider another thing, that this is what we observe through the lens of investigation. So what basically authorities are able to catch, to detect. So it could be also possible that authorities, it may be harder for them to detect and spot very complex and sophisticated schemes going offshore.
So you built these rankings using firm ownership, no? I'd like you to talk a little bit about this research, which is very interesting, and I think impossible to replicate in Latin America, because you have these data sets, and particularly a data set of listed companies, which are very few in Latin America. But anyways, we're speaking about a very particular way of money laundering, which is through ownership of firms abroad in different jurisdictions. No? So I'd love you to tell us a little bit about how this research was done, and what is behind this risk index that you're building, and how that can inform. I think that's a very, very relevant conversation for the region. How this type of indices could inform policy action and even private action of people who are involved, or corporations that are involved in trying to contain money laundering.
Yeah, no, thanks for the question. Yeah, actually, in recent years, my research and in general, Transcrime research has focused very much on trying to understand the role and the characteristic of firms involved in money laundering and, generally speaking, in crimes, with the idea that it is possible to somehow profile or to identify at least certain risk factors in firms, which could suggest potential criminal behavior, or at least anomalous behavior. And because for sure, firms are now being used extensively by criminals, right? To launder money, to conceal the illicit origin, but also to hide the ownership of assets. So they are used, for example, if we talk about trade-based money laundering. So if we talk about money laundering through false invoices, needs firms. If we talk about money laundering through securitization schemes, they need firms. But even if we want to launder the money by buying a luxury mansion in Paris or in Berlin or in London, well, this is often concealed behind a firm, and often offshore firm. So for sure, the transparency of firms has become a key issue. It's not us who said that. It's also, as you know, all the debate on beneficial ownership register by the Financial Action Task Force and at national level goes into this direction. Now, if this is the point, then it would be possible to identify certain risk factors which make certain firms at higher risk than others, and it is possible to map these risk factors. And this is an exercise that we are doing in certain areas and jurisdiction, and also in different sectors. And just again to provide some example to you and the audience what we are speaking in. Well, these are just two examples of what I just said. So these are, all these boxes you see are firms, and these are, I don't want to go into detail, but these are very complex spider webs of firms with a lot of connections, both used in money laundering schemes. Okay, this is to provide. So one element to be taken into account is the complexity of corporate links, corporate structures, and the opacity of this corporate structure. Now, so how can we define that? So we elaborated a number of indicators measuring complexity. For example, layers of firms which separate firm from its beneficial owners or ultimate owners, or if there are circular ownership schemes inside, or if there are links with high risk for jurisdiction or with legal arrangements, or if there are frequent and anomalous, unjustified changes among owners, among the legal form, among the directors, and so on. All these are ways to make the final ownership, ultimate ownership, more difficult to be traced back. By summarizing these into indicators, we try to apply to several areas. And for example, here you can see a map in which we mapped exactly firms' links with trust, fiduciaries, foundation, and legal arrangements. And this is Europe. But we have been able to replicate it in other countries and areas of the world as well. And I have a bit to disagree with you when you say that this is not possible in Latin America, because I think the volume and quality as well of data on firms also in Latin America is increasing quite rapidly, and it would help this kind of analysis. For example, here, by looking at ownership links across several hundreds of millions of firms worldwide, we identified the links across countries, corporate links, which are anomalous. What does it mean, anomalous? Which are not really justified by trade determinants, by FDI, by proximity, by migrants, and so on. So those which are somehow unexpected, okay? And this helps to provide a measure, a proxy of anomalous, odd relationship across countries, in which they could make use of firms to conceal certain illicit flows of money. So I think several things can be done. We have done a lot of research on that. We also validated it through empirical evidence, showing that all these indicators have a validity in predicting firms, which can also be involved in crimes. So ownership for sure is a dimension to be taken into account, as well as other, for example, the financial behavior, the accounting dimension as well, on which also us and many other scholars are doing research.
Can you talk a little bit, let's talk a little bit about secrecy and how that helps, that facilitates the layering and the money laundering through businesses. There is, of course, this idea that business owners need to be protected from theft, from like in Latin America, like for security reasons. But I think we've gone to an extreme where access, yes, we do have business registers, but we rarely have access to the ownership structures. Those are unknown, and we rarely, I don't think we have in any country, and Roberto, please correct me, beneficial owner registries. I don't think we have them. And we don't even have them for purposes of prosecution and investigation. So there should be like a midpoint place where we can protect the secrecy of whatever needs to be protected and still use the data that we need for investigation. Let's talk a little bit about that, and let's connect it with one of the questions. I've been so far ignoring the questions that I've been getting from the audience, but I will bring some into the conversation. Let's connect it to the role of offshore banking centers and tax havens in money laundering. Because I think that's part of it, no? The secrecy.
Yeah. So as regards the first question, you're right. So beneficial ownership register are somehow recent novelty in anti-money laundering. It's an ongoing discussion, ongoing debate. Not all the countries still have it. And also there are big differences across country, how registry are structured, what information they include, to which subjects they are open and accessible, and so on. However, I believe that there is one thing which I put as a provocation, which is the following. In a way, I believe it more than having a name of a beneficial owner, saying a natural person, it is more important to have information about how the ownership structure is defined. It is more important for me, rather than seeing Michele Riccardi on top of a firm, to see if Michele Riccardi owns that firm through complex country triangulation, without this being justified by the size of the firm, by the sector of the firm. If I have a small transportation company owned through layers of legal person based in Malta, so what's the point of that? And this provides more information for investigative person than my name itself, itself. Also because, as well, criminal obviously will try to hide himself from any type of registry by relying on figureheads and so on. Obviously, beneficial ownership registry are an advancement. So again, it's a constraint for criminals. It's an incentive for transparency. So we need to foster it, and I fully supportive of that. But as you say, also we need to find this balance between data protection and you know, accessibility of these registers. And as you know, there is an ongoing debate on that. There have been regulatory developments. There have been judgments. Let's think about the European Court judgments as well on that. And this is a living relationship in which we shall, I think, do a lot more about who can access this registry, under which conditions, for which purpose, and so. But for sure, having accessible and transparent registries is helpful, but it is totally not enough. So the next steps is also, okay, we have registries, but what information is in? Are names of person enough, or we need to collect other information on the firms themselves?
So we're speaking about this part of the world where criminal finances end up in the real economy, right? They go back to businesses in specific sectors and so on and so forth. However, there is a lot of talk about the role of cryptocurrencies. I have two questions from the audience on that. Can you comment a little bit what are the trends in using cryptocurrencies and in money laundering, and how do these strategies differ from what we were talking about, of bringing up the money through ownership or hiding the money through ownership in businesses in different jurisdictions?
Yeah, as regards cryptocurrency, so there is a lot of concern about cryptocurrencies, which is justified. At the same time, based on what we observe from investigation, it is still not, let's say, core, you know, money laundering method, at least for certain. For sure, they are key for all those offenders which are heavily involved in cyber crimes and which produce their proceeds in cryptocurrency as an origin. We see use of certain mechanism to try to, you know, avoid or to improve, foster, strengthen the anonymity of cryptocurrencies. For example, the use of mixers, the use of tumblers, the use of mixing different type of cryptocurrencies, so hopping from one blockchain to another. However, again, it is hard to say this is prevalent for criminal organization. Based on what we see, is still a minority. If this can evolve over time, it could be. We are not really know to what extent. Also considering that certain offenders do not have the capacity, the knowledge to manage themselves cryptocurrencies. And again, if they need to rely on external professionals, that could constitute a risk for them. So they will try to avoid it. This is my view about cryptocurrencies for sure. About the offshore banking centers, tax havens, of course, I mean, they play a role. So banking secrecy is as well as important as corporate secrecy. Although big steps have been done in recent years, also thanks to FATF, I think recommendations and intervention, and not just to FATF, but also to the developments that have been in terms of tax-related exchanges. So I think that there are still big gaps and still big holes to be filled in this area. But again, I believe that corporate transparency is somehow an area which has more concerns than banking domain.
We're close to coming to an end, so I want to open the conversation also for Roberto to participate, and let's talk a little bit about the policy implications of all this, because there is a lot of progress in terms of characterizing and understanding money laundering behaviors from your work and others, which is, I think, takes us one step ahead. But then I keep going back to my region and thinking how far away we are in terms of the data available and in terms of where we should be going. So I see, I guess, an easy list of recommendations that stems from the regulations in place at the international level. So it's easy to say that we should be talking about cash controls. We should be talking about more stringent asset recovery policies. We should be talking about business ownership registries, these type of things that can control part of it. But then there is a large chunk of weak capacity to investigate and to connect the dots as you have been doing. So I think the conversation, probably for Michele, let's talk a little bit about the limitations, even for you with the data from Europe, in trying to grasp and connect these two policy recommendations, where you see the policy recommendations from your work going to. And Roberto, why don't you take the opportunity to give us like a round closing for the conversation and your points. And I'm happy to take a couple final questions from the public if we have time.
Yeah, no, thanks. Very shortly. So all what you say is right. So rules and regulatory constraints can help. You talk about cash. I believe that putting cash threshold is something which creates small problems, at least in developed countries, okay? While when speaking about developing countries, I think it may create several problems. And so all those people who say, well, if we put cash threshold, we are putting obstacle to economic development, I think this is fool. This does not, I mean, it's an excuse. The average cash transaction in Europe is just few tens of euros. So if you put a threshold at 1,000 euro, does not change at all cash habits of developed countries inhabitants. If you are speaking about certain developing countries where there is not yet a well-structured financial system, where many people does not have access to the financial system, still live in underground economy, well, that may be important, but not about developed countries. So that on that. However, rules are not, and the same as regards other rules, for example, related to corporate transparency. However, rules are not enough, and I agree with you. What probably we need to work at several levels is a way of improving the skills of practitioners, both from the public sectors, prosecutors, investigators, and from the private sector, banks officers. We have a lot of technologies right now. We have AI, we have big data, etc., etc. These are not enough. What we need to improve is the skills of people. Prosecutors need to be better in investigating financial crimes. There are few prosecutors specialized on that world level, and we need to improve their capability. We have law enforcement already being capable in following these crimes, but still their skills can be improved. So I think increasing the skills, training them is the most important thing that we need to face right now. And I'm not saying that just because I'm in a university, but this is what I see actually, and we see both in the private and public sector.
Marcela, may I jump in?
Yes, please.
Thanks, Michele. It's always a pleasure listening to you. Couple of reactions. So one, our region has already, most countries have already passed some beneficial ownership legislation, and there are several countries that already have registries up and running. And I agree with you. There's an increase in the use of this corporate information. I want to have a question, and I think you are available to get all this data in part because of the level of coordination that the EU provides in terms of information and common regulation. What would Latin America have to do, if anything, to be able to share that corporate information in a better way? Because at the end of the day, you're interested not just in the local misuse of corporate structures, you're interested in the way in which those corporate structures exist in the next jurisdiction. I like your idea a lot that criminals like proximity. So you just for the sake of example, you may be committing a crime in say in Argentina, but you would want to launder the money in a neighborhood country. How you get that cooperation going on? How did it happen in Europe, and how do you bring it to our region?
I don't want to appear too rude and too negative about European Union, but when talking about corporate transparency, I'm not really sure Europe is the example to look at. And I'm saying that for one reason, because even though we are a European Union, we do not have a joint common registry of businesses, nor a common beneficial ownership registry. So what we have is data fragmented, held and stored and collected in different countries by different actors. So it's not at all harmonized. So there is, of course, there are talks, there are certain type of cooperation, but still we do not have a joint registry. And so I think that this is still a gap in the European Union. And the reason why we are able to do this kind of information is that we do not rely only on public registers, but on, and this is the paradox, on private actors collecting data from public registry and selling it. So if we are in a phase in which we have to rely on private actors doing that, so this is, is problematic. It's like relying only on private managed satellite for having our communication. Sorry for the example, but I think it's quite current, right? So I think that this is the issue. So as the public, we need to improve this cooperation, as you say, either in Europe, in Latin America, in Africa, in Asia. And as you say, I think what you say is very relevant. If proximity is important, then to have local, somehow, cooperation networks is somehow even more important than have global cooperation network. Let's start small and then be able to expand further.
In one of your recent presentations, you mentioned something that is also in one of your slides, that part of the myth is that the organized criminals or the criminal organizations want to control the top of the pyramid, but actually in practice, most of the times they want to go undetected. So they were not in your supply chain. So they're going to be in the middle or somewhere in between, not to be detected. You may have a legitimate construction company, and you may not realize that a supplier of your construction company is controlled by organized crime. Do you see that happening in Europe or in Italy? And is there a sector that is more vulnerable for the appetite of organized crime?
Yeah, I mean, there are certain sectors which are more vulnerable. Historically, sectors related to public contracts, such as construction or waste collection or renewable energy, are very vulnerable, as well as cash-intensive ones, such as restaurant catering, trade, wholesale and retail trade, especially of food, is very vulnerable. However, in recent years, also to the boost of thanks to the boost of e-commerce, transportation and logistics have become quite a relevant area, vulnerable sector, and this all over the world. And in this sector, subcontracting is definitely the weak link, because very often, and this not just for organized crime, but a number of predicate offenses and criminal activities, the first layer may be well respectable and a good looking company, sometimes with good certifications, but then the subcontracting chains has problems. And in the public sector, this subcontracting issue has been managed in a way, right, trying to limit the subcontracting chain, but in the private sector, this has not been done at all, also in international businesses. So this is a weak link, is a weak point, which also stresses the importance for private firms and not only banks and other AML entities to be able to monitor the risk of their supply chain of their third parties.
Michele, Roberto, we have to close. It's 1 p.m. Just like I'd like to allow like a 1 minute recollection from each of you after I make mine, because I wanted to respond to something that you said. When we talk about the difficulty with data in Latin America, we are not talking about the difficulty of sharing things that we have with other countries. We don't even share within our own agencies. So we really have, I do think we have a bigger problem. And even if we're transiting towards having ownership registries, it's very hard to connect economic groups that hold businesses that have different type of holdings in different sectors. So drawing the map is a huge work, just as you did for Europe. So let me just say, I see a role for scholars and academics to work together with agencies in trying to understand how the data that we have can be connected and used, and what is the data that we're missing. I think we're speaking about a problem that has behind it a huge lack of data. We're trying to improvise and think with what we have in our hands. But I think we should stress that the data that we have are insufficient and insufficiently used by authorities to prosecute. That would be my closing line, and I will give you each a minute. We'll just give a minute first to Roberto and then to Michele, and we close.
I like several of Michele's points. One is the importance of training and learning from agencies. A former head of the Financial Intelligence Unit in Peru said that one of the best reforms was sending people from his agency to customs for 6 months and taking people in from customs for a few months. So people start learning from other agencies. So maybe, Michele, you can help us find out which are those low-cost, high-impact type of activities that we could provide or we could support, including those that can be done by academics, by practitioners, or by multilateral organizations. Marcela, thanks a lot for hosting today.
Michele, you have the last word.
Yeah, very shortly. Yes, training, and scholars, academics can help on that. I just mentioned we recently created a network of scholars interested in money laundering research. So you can surf the web, www.moneylaunderingresearch.com, and we have webinars, which is a good form of training, as well as curricular university courses, and having scholars working together with agencies. And this public-private partnership, I would add the third node, which is academia. So I believe this is very, very important in money laundering studies. Thanks again, Marcela, for hosting, and Georgetown and
Thank you very
Roberto.
much. Thanks to the Georgetown Americas Institute for allowing us to have this conversation today. Thank you both.